fundsupermart.com.
So I just want to start with your outlook. Where do you see the global economy sort of moving in the second half of 2012?
I think we're in a very difficult situation at the moment because we've seen growth slowing, and from the perspective of central banks, if you like, growth hasn't slowed enough for there to be additional quantitative easing from the Fed or a new so-called LTRO from the ECB. So we've kind of left in no man's land from an investment perspective with weaker growth, big picture risks, the Eurozone, for example, Greece, and difficult to see much visibility through the end of the year. My belief really is that we have to accept that in the post-crisis world, growth will be lower in the developed world, growth will be lower in the emerging world as well, in China and India, but inflation will also be lower. So if we look at Asia, for example, inflation had been dogging the markets, really problematic for the markets for most of 2011. But those inflation rates have been coming down. That's allowed central banks to cut interest rates. That's providing some domestic stimulus in the future. So it's a very choppy, mixed picture. But in reality, I believe that the macro problems are biggest in Europe, and that the emerging world, including Asia actually, is relatively well positioned, even though these economies are slowing.
Okay, so against this sort of choppy and mixed background, where are some of the positive drivers that you see that could be driving performance in maybe emerging markets or maybe even in developed markets?
I think in terms of the positives, certainly there's lots of liquidity that's still in the system. There's no doubt the world is still flooded in many respects with the liquidity. And so I think it's taken away a lot of the risk in the banking sector. But what needs to happen as well in Europe is that there needs to be selective recapitalization of the banks. So this is one of the positive things which we're starting to see happen now, beginning in Spain, for example, with a new program there. I think this is something that will get progressively rolled out. And for me, it's a very important element in fixing the problem in Europe. I also think that the housing market in the United States, which has been a big headwind to growth, we're probably coming towards the end of that being a huge concern anyway. A large part of that, I think, is already being effectively factored in. And even though I'm not looking for dramatic growth out of the US, I think the US will avoid a hard landing in the sense of heading back into a technical recession, double dip. And I also expect actually it to become clear in China's case in the second half of the year that China's bottoming out probably towards the end of the second quarter and coming out of that very weak period of growth as we move through the end of the year. So there are definitely some positives in view in the course of the rest of the year.
Okay. Turning to the flip side of the coin, what are some of the risk factors that remain in the global economy that people should be aware of?
Definitely risks. The risks are particularly, of course, focused on the leverage which is there in the system, whether it's in Europe or in the United States. That leverage is going to be a constraint on growth, and it's potentially very problematic in terms of the way it impacts investor sentiment. So the most obvious risk at the moment is the risk that Greece eventually, because of a sort of political paralysis almost, inability to form a government, Greece exits the Eurozone. If that were to happen, then I think we'd see a substantial contagion concern through to Spain, through to Italy, and that would also impact global sentiment. That's the one thing I think in particular to be aware of in terms of these big systematic concerns. Another risk, though, is the labour market in the United States. It's been a bit soft, that data. Non-farm payrolls data, for example, has been weak. If that weakness continues, then I think people will start to question US growth, and that would be clearly a negative in this rather uncertain environment.
So against this overall backdrop, with all the positive and negative factors in play, what are some of the best investment opportunities that you see available to investors right now?
Well, we actually think that because of this risk aversion, that many of the government bonds in the developed world, the core government bonds, so treasuries, JGBs, gilts, bonds, look expensive. We actually think that equities look cheap, relative to those core government bonds. So we like the dividend yield play of equities generally, including in Asia, relative to government bonds. We like fixed income in Asia and indeed in the emerging markets, the pickup that's there from spread products, whether it's emerging market debt, whether it's Asian high yield, for example, investment grade corporates also in the developed world. These are opportunities. The secret for investing really in the longer term is to buy things when things are cheap, for reasons that are not related to the underlying asset quality. And that's the kind of environment that we're in. So it takes a contrarian approach to investing to actually realize those opportunities. But we see them very clearly at the moment in terms of valuations that in many cases are well below where these markets have traded in the past.